Hey, welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I'm taking a look at DraftKings stock. So we'll take a look at some of the fundamentals of DraftKings stock to try to figure out, is this a stock you should add to your watch list for 2020? As always, my stock picks and recommendations are for entertainment purposes only. Please talk to a financial professional before you take on any risks in the stock market. Now, of course, if you do like stock market analysis, personal finance videos, and investing ideas, then subscribe to the 40 Finance channel. Thank you to everyone for your support so far. All right, so the first thing to understand about DraftKings is how they came to market. This was a company that started back in, I think, 2007 or 2008. And sort of an angel investing concept with daily fantasy sports. Now they're progressing towards gambling legalization in the United States and the online and retail opportunities that are in that market. So you see here, DraftKings managed to go public on the NASDAQ through a blank check company Diamond Eagle acquisition, which listed in 2019 at $10 a share. But as soon as the DraftKings merger was announced, it moved as high as $18.69 on the first day. Diamond Eagle, this is the second highlighted part here, Diamond Eagle, also known as a Special Purpose Acquisition Company, or SPAC, raised money in 2019 and signed the acquisition of SB Tech, an online gambling technology business that it also brought to the company. All right, so what is a blank check company? And this is just to help you guys understand how DraftKings kind of came around. And basically, it's almost like an investment fund, right, that happens behind the scenes. It goes publicly traded with no established business plan, and they're basically raising money to go out and acquire a business. So it sort of starts as like a penny stock. They later decide who they're going to try to acquire. To be honest, they probably already know all these things before this even happens. But for the sake of argument, they go in, they raise money with well-funded investors, also through their penny stock or IPO offering, and then they go out and they make a huge acquisition play, which in this case was DraftKings and SB Tech, which is a basically gambling technology company. All right, so let's take a look at where DraftKings stock stands today and some of the key valuation metrics. You see the price today at $29.11. I think it actually crept up over 30 because the market is up yet again today. No forward PE. This company's not profitable yet. They do have $157,000 cash on hand and no debt. So that is the one thing that's pretty intriguing. You compare that to some of the other big casino stocks who are basically, almost drowning in debt due to the COVID scare. The yellow line on this green chart, this is a year-to-date chart, and I just sort of put in there approximately where the DraftKings merger was announced. So again, with that blank check company, you'd be looking at like Diamond Eagle prior to the yellow line, and then DraftKings took over. So the 52-week range, what we've seen out of DraftKings, and I did a little edit there because, company was originally Diamond Eagle, now it's DraftKings. Since DraftKings has been live, you're looking about $18 to $31.78. So today's price, if it stands above 30, which is the way it was trending, you're definitely looking at DraftKings on the high side of its first couple weeks on the market. All right, let's look at the TipRanks dashboard to see what are some of the best performing analysts saying about DraftKings at this early stage on the market. Shout out to DraftKings. I'm a paid subscriber. My affiliate link is down below if you want to learn more. TipRanks gives you a whole bunch of insights that you're not going to find on like a Yahoo or a CNBC about what are analysts talking about, what are hedge fund buyers doing, what all different kinds of scoring for individual stocks. So plug there for TipRanks. From the DraftKings side of the coin, we have 4 buys, no holds, and no sells. So again, I sort only by the best performing analysts, people who have already done well within the TipRanks dashboard. And you see you got a median price of $32. Which at the time of this was about a 10% upside. It's even lower now if DraftKings closes over $30. You got a high bar of 35 and a low of 25. So this is important to call out right off the bat, that with this stock being so young and the market running up as it has, this is not the kind of stock that's going to make you $1 million over the next, 2 or 3 months, right? You're going to try to get into this probably for the longer gain in order to see huge profits. All right, so now I want to pick through a couple slides that I got off the DraftKings investor relations site that kind of explains what is the vision of this company for expanding profits going forward. This is 100% a growth stock. You're not investing in this company today because you think that it is a fundamentally sound stock as of today, like you would think for like maybe a Microsoft or an Apple, right? It's all projections for the future. So let's take a look at how they plan to get there. So the big win here with DraftKings is this online sportsbook play, allowing people to make bets on their phone from the comfort of anywhere. And of course, you combine that with the legalization that's going on in chunks around the USA, and that's the key opportunity. Now, they also are big on what they're calling iGaming, which is similar in the sense it's on your phone, but it's more traditional games like poker and roulette and things like that. DraftKings, the assumption here is that the United States gets a lot more legal online sportsbook states to come online, ideally before the NFL season, I would imagine. And then from the iGaming side, you have to just assume for this model that they can get more states doing iGaming, which is the traditional gambling games that you would see in a casino. Now, off to the right, you have the projected net revenue, and you see how the gains go. Now, this is the gains with the assumptions I just spoke about. So that's important to note that these are not, these are based on things coming online and becoming legal. If those things were to happen, you can see that the big win, 2020 is an improvement for sure, like a plus 25%. But then by the time you get to 2021, you have a 30% increase in projected net revenue over the year prior. So that's really what you're looking at for DraftKings. Not necessarily that 2020 changes the game, but 2021, do those legalizations get in place? Do you believe that will happen? And that's where your profits will come from. All right, I like this chart too here from the investor relations area. This is where DraftKings takes New Jersey, which is a state that they currently play in, for not only mobile, but retail bets, as well as the daily fantasy that they're famous for. And they take New Jersey as a standalone entity to show us how they project their revenues going forward. And long story short, if you look off to the far left, you have the launch year of 2018, and that gray bar ultimately is the contribution profit, is the bottom line for New Jersey in 2018. It was a $10 million loss. You get to year one, first full year one, and you're down to a loss of $6 million. Now in 2020, which is of course this year, the law of efficiencies start to play through, and you get up to a $9 million contribution profit. So very good New Jersey outlook for 2020. And then by the time you hit 2021, this is where things are really building up, and you got a $49 million contribution profit. So again, this is just New Jersey. This is just estimated, and it banks on a lot of things going right, but that's what companies always do in their expected estimates. But you can see if you take New Jersey as a standalone state and you extrapolate it out to every state that goes live with online gaming, then all of a sudden you can see how these profits would grow over the next, call it 3 to 5 years. All right, so now we understand the opportunity by a state-by-state level, but is DraftKings the brand to deliver these results? And I thought it was interesting to investigate this sort of brand awareness slide. You know, this is done by the same company that's pitching you on investing, so you have to be careful about the expectations. But you see, not only on a DFS level, but a sportsbook level, in areas where DraftKings already exists, they have a very high top of mind and preferred vendor score. So that's obviously positive. When they go to and attack a market, they seem to do a very good job of penetrating the market and resonating well with the fans that they need to make money. All right, so where does it all stand from an investor standpoint? You know, this is a stock that I'm watching, namely because I'm already a big DraftKings player, particularly during the football season. I usually spend a few $1,000s a year on daily fantasy football, and I've had some nice little wins in that time, but I'm by no means an expert. I literally play for entertainment, and I enjoy doing it. So I'm a prime customer. And what I would say, blending the two worlds between analyzing stocks and playing daily fantasy sports, this is an intriguing opportunity, but almost exclusively for the mobile gaming aspect. I think if you get the mobile sports betting and the iGaming traditional games in the palm of your hand in states, I think that it's a huge win. How much legal feedback are they going to get in that process? I'm not really sure, but they certainly have a ton of opportunity to grow their business in the United States over the next 10 years. One thing I want to call out, especially for the young investors though, is that this company is not profitable right now. It will not be profitable this year or next year, more than likely. And you're probably for 3 or 4 years away. You saw that New Jersey model for profitability, but that's only their best performing state, right? And the more rapid that states come online, you see that it was a 3 to 4 year run per state to achieve profitability. So just keep that in mind. Now, they have no long-term debt, and they're extremely well funded, thus the blank check company that bought them. And they estimate right now that they could burn $15 million a month without sports and still survive this sort of COVID pandemic. So at the end of the day, my 2 cents, I'm looking for the price to dip under $25 on the next stock market dip. Is that going to happen in 2020? I have no idea, because it just seems like the market goes up and up and up. But I do think DraftKings will go down substantially if there is a market dip. So I'm trying to get it under $25, knowing that a 3 to 5 year hold for this one. Just put it in the back corner. And my advice to anyone watching, if you're interested in DraftKings, you do owe it to yourself to check out the other casino and gambling plays available in the stock market. There's much bigger, safer companies, so to speak, in my opinion. Las Vegas Sands comes to mind as one I would say is like the most fundamentally sound. So DraftKings isn't your only option, but if you align with the brand like I do, and you believe that mobile betting will eventually get here and it's going to be big when it does, I think DraftKings is worth a speculation play if you can get it on the dip. All right, hope you guys enjoyed this DraftKings breakdown. Please give me a like and subscribe if you did. I'll see you on the next video.